Hi, welcome to the Market Alert for Wednesday, the 3rd of August 2016. And starting off in the 5-minute chart, you can see that we had two trades here. The first one coming in at 5 minutes past 3, and the market going down and trading to the scalp level just below there before the market found support and then continued lower. On this one, only managed to pick up just over the 20 points as the market started to come back. Even though prices drove through, they didn't quite continue with the next bar. We had 3 or 4 bars sideways there, so it looked like the market was finding support to move higher, but then reversed and moved lower. And the reason for this I will explain in just a moment. We then had a second one which took until the early part of the evening to actually head down to the scalp, and there's a bit of a clue here that the market was running out of steam because it took so long to actually get to the scalp and then down to the 18,250 level there, the blue line, giving a nice few points on that trade as well. So the first two trades of the session were profitable, and I said before, if you've made money in the first half of the session and good profits, as in this case over 40 points, then there's no point in staying in the market for the remainder of the session. And it took until 10 past 8 before we got the next signal. Had you traded then, and you can see the market coming back and taking 18 points or more off the profits that you'd already made, because obviously you can see there the plunge protection team coming back in and driving prices back to the upside, because as I've said on many occasions, and I'll still say it, they don't want this market lower in any sort of great speed. They may want a controlled decline in prices, but they'll do anything to try and keep this Ponzi scheme alive. It's one of the biggest bubbles in the world, and in fact Japan's market, stock market that is now, is about 95% controlled by taxpayers' money to try and keep the illusion alive. Here you can see, as I said, in the last few days the prices have rounded over and moving to the downside. I thought there'd been a bigger increase in yesterday's down move, but not so far. That said, it's looking like we could start to see some momentum build in this market to the downside, and that's because obviously the lows in the implied volatility, which I'll come to in just a moment, and also the news as well. And speaking of news, what have we got today? There's a lot out today for the world at large, really. We've got the UK at 9:30, we've got the services PMI, and then we've got the big one for the US. We've got the non-farm payroll figures. They're out. Manufacturing and crude oil inventories as well. They're all being released today. The two after 3 p.m. is the ISM non-manufacturing PMI, and then we've got crude oil inventories as well. And crude oil's been having a bad time as well. We're back below $40 per barrel. As you can see here, prices have dropped from 52 back in the beginning of June all the way down to $40 per barrel. They just holding at this level. As you go back a bit, you can see that we've got a bit to go yet to get back down to the 29 level, but crude oil selling off quite sharply there. So the crude oil inventory is important. You don't want to be in for that today in the news at 3:30. And on the implied volatility, we've got 10.92. This increasing now. Again, still a strange pattern in the historic volatility. I don't know why it stayed up like this and not actually followed the implied down. But as I said before, the most important thing is the yellow line, the implied volatility. That's the sort of measurement of forward risk. That's the one you want to have a look at. The reason for the market decline yesterday is the Italian banks, German banks, a new low in Deutsche Bank at 11.23 yesterday, breaking that 11 euros per share level. And again, like I said before last week, watch for the 10 euro level, which I think will be tested in this market. And there you can see European bank bloodbath destroys a stress test credibility. I mean, the whole thing was an absolute farce. I mean, since all of these so-called European banks passed the stress tests, you can see what's happened to the share price of these banks. So again, fudging the figures, changing the criteria, creative accounting, any other euphemism you want to use to try and hide the fact that the banks have got major problems within the Eurozone there. Right, that's it from me. I will see you in tomorrow's edition. Other than that, thanks for watching, and if there's anything to report, I will let you know. See you in the next one.